Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Shaun Richards from Not a Yes Man Economics, and we're going to look at unsecured credit or unsecured debt, however you want to look at it, within the UK. And what's your take on this? We've had an update this morning.
Well, we're seeing pretty much the same pattern, which for those that haven't followed this, in essence, if you look back over the last 18 months or so this covers Brexit, covers the Bank of England move last August, the growth rate's been around 10%. Now, the Bank of England's response to this has been, well, quite varied. First, it claimed that there wasn't any problem at all. It spent a lot of time saying all the debt ratios were falling. Now, or more recently rather, it switched its thing to saying there might be a problem, which is the equivalent of the Bank of England hedging its bets, because what will happen is, if something happens, it'll point back to the bits where it said there might be a problem. Then on the other side, if you read further down the paragraph, it says there's no real problem at all. And if you read through the financial stability report yesterday, there are all sorts of numbers there that say it's all fine. But I'll give just one thing for people to pick out of that. It takes up the student debt numbers. But why? Because that's a growing area. Anyone watching this, listening to this, who has student debt, that'll be an issue to them. So why did you take it out? Well, it's quite obvious, isn't it? It's been one of the fastest growing areas. You could do that with anything. It then came back essentially also saying that if we look through the pattern, it's being told by lenders that they're cutting back. They cut back in the second quarter of this year, according to them, third quarter of this year, and will cut back again in the fourth. That's the story. Except each month the growth has been approximately 10%. Now it's varied around it a bit. This morning we saw 9.6% as the annualised growth rate. And again, the increase was roughly £1.5 billion a month, which is the way that this runs through. But that's the same story. So, how can this be, if you take the official line, everyone's cutting back on the availability, yet the number's still the same. So there is a problem. And if we step back again and look at what this policy of the Bank of England was supposed to have achieved, it was to boost lending to smaller businesses. But we find ourselves in a situation where in October, the latest month, come out this morning, it actually shrank by 400 million. The growth rate over the last year is 0.5%. So the actual position is as plain as day, in my opinion, that they've boosted unsecured credit, which is, again, for as long as I've analysed it looking backwards in the UK. If you go back, even looking back to something like the Barber boom of the early 70s, it was the same problem. You ease monetary policy, you get unsecured credit growth out of control. That washes through the system. But on the other side of the coin, something that badly needed, in my opinion, we look at issues with productivity, is money flowing into smaller businesses. Try and fire that up in some sort of way. And the actual deeper question in that, I think, is, why aren't businesses borrowing? Is it as simple as the banks won't offer it? Is it more complicated? I think it's so that in circumstances business owners just don't want it. My late father, he had a smaller business, and one of his arguments was that whenever he needed the money, the banks tried to take it away, so he didn't really want it. And we know probably post-credit crunch that's got worse. So there are a lot of things splashing around, but this is a problem. The reason how we know it really is a problem is the Bank of England denies it. It's trying to hedge its bets. If you read its documentation, it'll say somewhere in there's an issue. So if it kicks off, it'll point to that. But for ourselves here, looking forward, it's a little bit of a mess. The numbers are not quite what they were pre-credit crunch, but you see there's again a problem. If you point to something like a long-term trend, well, the long-term trend in the last decade was a disaster, wasn't it? So there is the thing. And in terms of British economic policy, sadly, it's the same as it ever was. People want to talk about worries about Brexit, the lower pound. But this issue has happened each time the Bank of England's eased policy.
Understood. Look out for that. In the meantime, Shaun Richards, thank you very much for joining us.